I'd like to draw your attention now to a change that came through as a big surprise in this year's Finance Bill, soon to become Finance Act 2013, and that relates to an inheritance tax change for business owners. Now, if we think about the way that the current rules work, that as planning somebody's estate, if, for example, somebody goes into business and they, for example, buy some business premises, the advice generally will be to secure the debt on the business premises against, for example, the taxpayer's home. The advantage of doing that is around the inheritance tax liability if the individual were to die. So, for example, you've got your business premises, which for inheritance tax purposes are covered by 100% business property relief, so therefore have no IHT value in the estate, and then we deduct, in arriving at the value of the rest of the estate, the value of the loan we've secured against the home from the value of the home. So therefore we have the value of the premises exempt from IHT, and the value of the debt secured to buy those premises, because it's been secured against the home, it's deducted from the value of the home, so you sort of get double relief. Now, unfortunately, HMRC have woken up to this type of planning, and with effect from royal assent of this year's Finance Act, it will no longer work, in the fact that when you're valuing the estate going forward, you will not deduct the value of the loan against the asset against which it is secured, but you'll actually deduct the value of the loan from the asset which was used to purchase from that loan. So, for example, you secure it against the home, but you'll actually deduct it in arriving for IHT purposes from the value of the business premises. Now, that's clearly a disadvantage because you actually don't get a good level of deduction for the value of the loan. So the planning point here is, if you've entered into that type of planning with clients so far, the suggestion might be that you actually move the security of the loan from the family home to the business premises, because there's no longer an inheritance tax advantage in doing so, which means that you protect the family from the business failing. Because at the moment, the way you may have structured it, that if the business fails, the family home is at risk. Whereas if you move the security over, when the business fails, the family home is secure. So it's a question of identifying clients who may be impacted by this, and following royal assent, looking at whether you wish to unravel that type of planning that you may well have done in the past, and indeed for very good reason.